Welcome to the Vaughan Nelson podcast. Today is the first quarter 2026 Vaughan Nelson Global SMid recap. And with me today is portfolio manager Jim Eisenman. Welcome, Jim.
Thanks, Dan.
All right, Jim, hopping into the quarter. Portfolio it produced some nice, strong relative performance. And just curious, could you just walk us through some of the drivers of that outperformance and some of the top contributors?
Sure. The portfolio benefited from both stock selection and allocation during the quarter. The names exposed to data center and infrastructure capex continued to perform well. In addition, the portfolio was overweight energy entering the year, so we were well positioned to benefit as oil prices moved higher in March. That overweight to energy going into 2026 was driven by industry fundamentals and the lack of capital investment in hydrocarbons over the last 5 years. From a capital allocation framework perspective, the industry had a very attractive setup over the next 3 years. The recent developments with Iran simply pulled some of that upside forward. The top two contributors for the quarter were Technip FMC and Element Solutions. Technip FMC is a provider of subsea wellhead technologies to the oil and gas industry. They have a differentiated model that combines engineering, project execution, and proprietary equipment that improves project economics for customers. The stock outperformance was driven by strong quarterly results and sharply higher oil prices as a result of the U.S.-Iran conflict. Element Solutions is a global specialty chemicals company focused on high-value formulations used in electronics, semiconductor manufacturing, PCBs, and industrial applications. The company has exposure to structurally attractive electronics end markets where increasing chip complexity, advanced packaging, and higher layer counts drive intensity per device higher. The stock outperformance was driven by strong 2026 financial guidance, which was well ahead of expectations.
And now, how about some detractors? Anything that specifically that jumps out from thematically that caused some outperformance? Excuse me, underperformance?
Well, the top two underperforming names were CCC Intelligent Solutions and Cushman & Wakefield. CCC is a software platform serving the auto insurance and collision repair ecosystem. They provide mission-critical workflow data and AI-driven tools to connect insurers, repair shops, and other participants. Cushman & Wakefield is a global commercial real estate services firm providing brokerage, leasing, capital markets, property management, and valuation services to corporate and institutional clients. Both stocks produced solid earnings results for the fourth quarter with solid 2026 guidance, but they sold off on investor fears that their business models would be disrupted by artificial intelligence.
And then you added a handful of new positions during the quarter, and of course some exits on the backside. Any key themes, any key characteristics that within those portfolio changes?
Yes, so we've been net sellers of tech and data center focused names, primarily based on valuations. In addition, we began to take profits in some of the industrial holdings where valuations fully reflect the improvement in industrial production in 2026. During the quarter, we initiated a significant number of new positions where we see attractive long-term economics. These names were very idiosyncratic and spread across a variety of industries and countries. In each case, the investment thesis is grounded in strong competitive positioning, capital light or scale advantaged business models, and elevated levels of investment with clear pathways to improving return on capital. We also exited or reduced positions where expected returns no longer met our hurdle rates, where industry competitive dynamics have changed, or where valuations have become excessive.
And then let's talk some portfolio positioning. How are you positioned now within the portfolio after these changes? And then what drives those portfolio decision making decisions?
So, from a sector standpoint, the portfolio remains overweight industrials, materials, and energy, although less so than at year end. We are underweight all other sectors. Our positioning decisions continue to reflect where we see them most attractive asymmetric payoff profiles grounded in company specific fundamentals and capital allocation behavior. We see a growing divergence in capital allocation discipline by companies in our investment universe. The ones leaning into long term investments with a focus on returns are really starting to separate themselves from those reacting to near term pressures or geopolitical noise. We continue to use periods of volatility to selectively initiate or build positions where we see compelling long term upside.
Okay, great. Well, thank you so much for that, Jim. And we will now move into returns. In the first quarter of 2026, the Vaughan Nelson Global SMid strategy returned 2.21% gross, 1.98% net, and the MSCI All Country World Index SMid Cap returned 0.23% over the past 1 year. Vaughan Nelson Global SMid Strategy returned 29.13% gross, 27.99% net, and the MSCI All Country World Index SMid Cap Index was at 21.64%. Over the past 3 years, Vaughan Nelson Global SMid Strategy returned 13.98% gross, 12.97 net, and the MSCI All Country World SMid Cap Index is at 13.07. Past 5 years, Vaughan Nelson Global SMid 7.91% gross, 6.94% net, and the MSCI All Country World SMid Cap Index is at 5.83%. And last, since inception, the Vaughan Nelson Global SMid Cap strategy has returned 14.67% gross, 13.65% net, and the MSCI All Country World's mid-cap index is at 11.37%. And with that, that's a wrap on the first quarter. So thank you, Jim, and we'll have you back after the second.
Sounds good. Thanks, Dan.
The views, information, and/or opinions expressed during this podcast are solely those of the individuals involved and do not necessarily represent those of Vaughan Nelson and its employees. Vaughan Nelson does not verify and assumes no responsibility for the accuracy of any of the information contained in the podcast. The primary purpose of the information, opinions, and thoughts presented in this podcast is to educate and inform. This podcast, or any podcast in the series, does not constitute professional investment advice or services, and any reliance on the information provided is done at your own risk. Past performance is not an indication of future performance. By accessing this podcast, you acknowledge that the entire contents of this podcast are the property of Vaughan Nelson or used by Vaughan Nelson with permission and are protected under U.S. copyright and trademark laws. Securities discussed within this podcast may be held in the Vaughan Nelson strategies.